Full stop. Good morning, good afternoon, or good evening for those of us joining from Asia. I'm Nicolas Veron. I'm a senior fellow at Google. It's my pleasure to introduce this session of discussion, which will be about regulating digital assets. And the point of this is to compare South Korean and European perspectives. We're not sure exactly what the US perspective is right now, so we will leave that on the shelf for a moment. But we're very honored to have partners of the Korean Institute of Finance, KIF, which is based in Seoul, South Korea, and Professor Lee Jong-do and his colleague are here today, and we're looking forward to learning more about what's happening in Korea. So in the initial remark, we'll have Professor Lee. We'll have Matthias Levin, who is acting head of unit for digital finance at the European Commission, DG FISMA, Directorate General for Financial Stability, Financial Services, and Capital Markets Union, because we still call it Capital Markets Union, at least in the name of DG FISMA. And he has worked on a number of related issues, banking, investment, financial market infrastructure. We'll also hear from a national point of view, which will have the same accent as I have. So from France, many thanks to Marianne Jarlot, Deputy Head of the Innovation and Digital Finance Division at the French Securities Regulator, the Autorité des Marchés Financiers, for joining us in Brussels today. She's been involved in a number of the discussions about crypto assets regulation and registration. So she has also worked in compliance functions for French and international financial firms. And joining us remotely from Asia, I think, Mariana de la Roche is founder of her own consulting firm, but more importantly is a recognized expert on issues regarding crypto and blockchain services. She's leading a number of initiatives, AI and Blockchain Convergence Task Force at INATBA, which is the International Association of Trusted Blockchain I don't remember the last A, but you will fill up the gap. Sorry, I need more coffee. She's also a member of the UN Internet Governance Forum, a board member at Think Block Tank, and an expert at the European Blockchain Association. So thanks very much, Mariana, for joining us remotely at an inconvenient time. We're grateful for that. I didn't introduce Professor Lee properly. He's a researcher at the Korean Institute of Finance. He works on a number of issues, including innovative finance, which is a very big theme in Korea these days, virtual assets, big tech regulation, and anti-money laundering, which we shouldn't forget in the discussion. He also has worked at the Financial Supervisory Service, which is organizations that implement supervision of financial firms in Korea for a number of years, also working on a wide range of issues in banking, securities, capital markets. He has represented Korea in many international committees, and he has published also on these issues. So without more introductory remarks, Dr. Lee, over to you.
Hello, my name is Jong-do Lee, and just call me Jaden or Mr. Lee. I am studying digital asset and electronic payment system and money laundering regulation in Korea Institute of Finance. It's my great honor and pleasure to present our system here in Brussels, and I share ideas and insight with a European expert with you. So I am permitted about 8 minutes, so I prepared the material. And today, I'll brief key issues on crypto asset regulation in Korea. And for more details, please refer my PPT materials. Today, our topic is more focused on regulatory policy, so I'll skip the market trend. But we need to keep in mind that recently, stablecoin market is growing rapidly. Stablecoin is different from other coins, including Bitcoin, Ethereum, or other altcoins. As stablecoins function as a means of payment, not just for investment. It has more influence on the regular financial system and has more policy implications. This is Korea's crypto market situation. In Korea, Korea Financial Intelligence Unit surveys and discloses information on domestic crypto market and industry. KOFIU also regulates crypto service providers. This is a variable point from the policymakers. Recently, more money is invested on crypto market than on capital markets. Currently, Korea prohibits legal entities from crypto trading, and crypto-related ETFs are not permitted in Korea. Even we cannot trade Nasdaq-listed Bitcoin ETF. On the background of this strict policy, there is consideration to direct investment to the traditional capital markets and promote productive industries. There are worries that money may move to crypto asset market or overseas market to invest crypto ETFs. Okay. These characteristics of Korean market and industry. First, there is overly speculative trading demand, but as domestic ICO is prohibited, no crypto assets are issued in Korea. Second, too many small cap altcoins are listed and traded in the market. These coins are vulnerable to unfair trading, like as price manipulations. Third, in Korea, there is a minimal legislation for user protection, AML, CFT regulation, and fair trading. Despite its market volume, there is no regulation on issuing and information providing. And fourth, this is my belief. There is enough infrastructure for crypto asset industry, including export, technology, and money. But for the regulatory issues, many Korean issuers operate businesses in foreign countries. And fifth, there is a kimchi premium. Do you know kimchi? What is kimchi? Yeah. It's a Korean traditional food and symbolizes Korea in capital market, like as a kimchi bond. Due to strict foreign exchange regulations and limited liquidity in the Korean market, same crypto assets are traded at higher price than overseas markets. For example, this is Bitcoin's kimchi premium index in Korea. And globally, there are various regulatory perspectives and delays in establishment of regulations. Still, including Korea, in many countries, crypto assets legal status is unclear, and there is a disagreement on the necessity of crypto asset investor protection. Even though a country established regulatory system, there is still limitations with regulatory jurisdiction and enforceability. I think this is the most important reason. In case of Korea, even though we enacted the User Protection Act from this July, we cannot apply regulations on the unregistered overseas crypto asset service providers, even though they are targeting domestic individuals. However, there will be more close relation between crypto asset and the legacy financial system, especially after the US SEC's adoption of a spot Bitcoin ETF. more financial institutions are investing on crypto assets. In 2017, Korean government prohibited domestic ICOs and financial institutions any crypto-related businesses. And in 2020, Korea adopted virtual assets and virtual asset service providers regulation as part of AML CFT policy. And in 2023, we enacted a Virtual Asset User Protection Act. I know in MiCA called it crypto asset, but in case of Korea, we call it a virtual asset. So I use a virtual asset when I comment to Korean system. And now Korea is preparing next registration similar to MiCA to provide a foundation for comprehensive digital asset regulations. This is a summary of Act on the protection of virtual asset users. As you can see, there is no regulation on issuing process or issuer requirement, and we use the term of user, not investor. I share this for your reference. We are studying other jurisdictions' regulatory systems to prepare our next registration. There is one interesting point. Before 2018, Hong Kong was the Asian crypto hub. And as Chinese government cracked down crypto asset industry in 2018, many crypto businesses moved to Singapore. Then again, from 2022, as Singapore's regulation became strict, nowadays many businesses are moving to Dubai or Abu Dhabi. I think there is some kind of race to the bottom problem among governments. I think there is still no best practice. We need more time to study a legislative effect. This is the same with MiCA. And recently, more focus is given to CBDC and stable coins. And there is a common approach of same activities, same risk, same regulation principle, designing a system corresponding to crypto assets' actual function and risks. And these are main issues of crypto asset regulation in Korea. One peculiar topic is restriction of legal entities' bank account for purpose of crypto asset trading. And in November, the Virtual Asset Committee was officially organized as an advisory body for government, and the committee is deliberating these issues. With this, I expect that there will be a more aggressive regulatory policy makings on crypto asset in Korea. Thank you so much for hearing me.
Thank you so much. This was remarkably crisp, and I think we'll have your slides also on the Bruegel website because there was so much information there. So I think many people here will want to come back to some of your insights in the slides. I was in Korea 2 months ago, and I was impressed by how many people are involved in this conversation in Seoul. Also, I think a former head of the Financial Services Commission is now involved in crypto and fintech investment. So it's a very important country to look at in the context of those debates, despite what you highlighted as the regulatory restrictions. Matthias, what's happening here in Brussels?
Well, quite a lot of things, I would say. But first, let me take the occasion to thank Mr. Lee for a very good presentation, which I think already kind of put a little bit the accent on some of the things that one needs to pay attention to when thinking about crypto assets, and more precisely the kind of regulation, potential regulation and supervision of crypto assets, and which are very similar kind of themes that we reflected upon prior to MiCA in a sense, which is kind of what is happening in the marketplace, how do we position ourselves about that, what are the risks, what are the pros, what can be done about it, Should we incorporate into existing kind of frameworks? Do we need a bespoke framework? Should we prohibit, etc., etc.? And so what I will perhaps briefly touch upon now is a little bit, kind of four main questions, which is why regulate? I think echoing a little bit where you're hinting at. A little bit then also second question, how regulate? And perhaps turning a little bit to where we are, a little bit, where do we stand in Europe and what comes next? In a sense, so I think why regulate? I think you alluded to that already a lot in your presentation. We have seen also in Europe a fairly kind of significant and increasing interest from investors, consumers in crypto assets. It remains a niche product for sure compared to existing financial instruments, assets and the like, but still the trend is clearly there. And I always allude to, of course, this is global, but for example, when we tabled MiCA at the end of the day, I think the global market cap was 300 billion. And then at some stage during the negotiations it was 3 trillion. Now it's somewhere in between 2 trillion and 3 trillion. So just to say that it's a market that has been developing very fast. All the aspects of that is of course happening in Europe, but we do see from, for example, Eurobarometer service and the like, that there is an interest from certain strata of society. And with that interest, of course, you need to start thinking about the risks. And I think we've seen, it's clear that there are significant risks to consumers and investors involved in this, especially in the absence of regulation and supervision. And that over time, there may also be risks which are of more prudential nature and financial stability nature. If the current trend continues, the markets continue to increase in size, and what you alluded to as well, the interest of a traditional financial sector starts to materialize, which we've also started to see a little bit. And that's why we think that it is important to kind of to look at these risks, start addressing these risks, and that's very much what guided us at the time. Another issue is, of course, there is very significant kind of innovation potential stemming from the instruments themselves, the underlying technology, DLT and blockchain. And we also do know, even though regulation is not the air du temps in the sense that regulation can play also a positive role in kind of providing clear rules and a kind of a robust framework upon which the kind of markets and the activities can continue to develop. And we also thought that was another kind of guiding principle. If you want that innovation to happen, we want it to happen on a sound basis, and hence regulation might be necessary for that reason as well. So that's a little bit where we ended up. And then the question, of course, is if you have come to that conclusion, the second question is then how do you regulate? And for us, it was quite apparent from the beginning that yes, there is one particular element perhaps there that merit particular attention, which is stablecoins. But stablecoins is only one part of the ecosystem. It has developed rapidly, but there is a much broader ecosystem out there of service providers and a much broader range of other crypto assets that may merit attention as well. So kind of a core principle for us at the outset was to kind of be comprehensive, be holistic, and to kind of ensure that we cover the ecosystem as a whole. So that includes both issuers, as you alluded to, but also the service providers. We thought that was very important to get a hold of the risks in the value chain and to provide comfort to ourselves and to consumers and investors and counterparts that we address the risks and provide a sound basis for the market to develop. So that means, I think you also alluded to that in your presentation, it means addressing conduct risk, it means addressing market integrity risks. Over time, also put a framework in place that can deal with financial stability and prudential risks if a sector will develop. At the same time, of course, we do acknowledge, and I think that's amply clear, that there is a lot of heterogeneity in the market, a lot of divergence, and kind of normal crypto asset is not the same as a kind of significant global stable coin. You need to be kind of tailor your rules to kind of cater for these differences. You need to be risk-based, and you also need to keep proportionality in mind. And whereas at the end of the day, perhaps the regulations we do put in place, if you're familiar with MiFID, if you're familiar with kind of existing market legislation, you don't get too many surprises. MiCA is largely, to some extent, inspired by existing kind of international regulations as well. But you need to tailor it. You need to be kind of mindful about how it works in an area where the technology is different and where the ecosystem is still very small and growing in a sense. So tailored, risk-based, and proportionate at the end of the day. So turning to my third question is, where do we stand in that respect? Well, the framework will be fully applicable in a few weeks. By the end of the year, the stablecoin provisions started to apply already this summer. Meanwhile, we are busy adopting the kind of complementary legislations, delegated regulations that had to be put in place in EU parlance, level 2 measures. This is what keeping us busy for the time being. There's a fair amount of level 2 measures under MiCA. The co-legislator decided to have, well, I wouldn't say a principles-based regulation in place because it is pretty detailed, but to complement it as well by the supervisors with a large number of kind of complementary delegated regulations that will kind of further substantiate and specify the requirements that are set out in MiCA proper. So there's about 40 or so of these technical regulations which we're in the process of adopting, and that's essentially where we stand. Then in terms of what next, I mean here perhaps just two final words. Part of what next is of course internal to the EU. We will at some stage have to report and review and take stock about how this new regulation fares. It is challenging to regulate a quickly evolving space in a sense, and we for sure where we ended up may not be the kind of the solution for everybody else, even though we believe that there are certain principles underpinning it that should be respected. So we have to look a little bit at within Europe, take stock at some stage. Too early yet to start doing that, but first now implement, then take stock internationally. And I'm very happy to hear that Korea is kind of moving in a direction of considering something similar. That's very welcome. These markets are global. There are FSB recommendations now, and we think that we should work with other countries as well to ensure that the problem you alluded to, race to the bottom, regulatory arbitrage and the like, can be addressed. And the best thing to address that is to put sound regulations in place.
Thank you so much. Let's move to one of the member states, and in France, France is particularly interesting. It was under the spotlight, of course, when Binance was registered in Paris a year or two ago, and I noted that just last Thursday, Marianne Barba-Layani, the chairperson of the AMF, so your boss, Marianne, and François Villeroy de Galhau, the governor of the Banque de France, the National Central Bank, and chairman of the French Prudential Regulatory Authority, penned an article which is distributed in print for the participants in person here, calling for European supervision of crypto. So how do these challenges look like from Paris?
Well, first, maybe I will end with this paper because I will start from the framework that we have in France since a couple of years now. Since 2019, we have a framework for crypto assets in France. This framework is basically, we have a mandatory registration for the provision of 4 services of crypto assets. We call that digital assets in the national framework. So for custody, for fiat to crypto or crypto to crypto exchange, for platform also. So there's a mandatory registration, and then the requirements are basically AML and fit and proper requirements. So it's a minimal framework. Then we have a mandatory optional licensing also for other services. You would ask why would players go for an optional licensing where the requirements are much higher, closer to MiCA actually? Well, because it grants further possibilities, like for example active marketing. So this was the framework we put in place at a time where we thought it would make no sense to go further if Europe doesn't do the same. Because when we are talking about cryptos, there is digital, so players can quickly move to another country. So it doesn't make sense to have very strict rules in one member state and not in the others. So what we did in parallel is we pushed also, and we worked with the European Commission also to work about a framework at EU level. And we shared our experience at national level to explain how it could work at EU level, and then it ended up with MiCA. So it's a very good news that we have MiCA now. It will apply to all member states. We also had from the issuance side, we also had an optional framework, which was the optional ICO licensing. So this was at national level. Since a couple of years now, everything is happening at EU level. MiCA the proposal has been published several years ago in 2020. And since a couple of years now, we are working with ESMA on detailing the rules from a practical point of view. So it's really concrete now. We have been working on a lot of RTS, ITS, and guidelines, so the technical standards and the guidelines. And what we have tried to do at the AMF level is to share our experience from the national framework to set up the rules in these standards and guidelines. Now that almost all these standards and guidelines are finished, I hope in a couple of months it will be done. I think the next step for us will be supervision, because MiCA is entering into application at the end of the year. Now the issue is really supervision. And I think the key elements about this supervision is that we are no longer one regulator. It's really it's really a problem for 27 regulators in EU. And here we have big challenges because we are facing players who have great ambitions, I would say. They don't want to target just one member state, they want to target the whole EU markets. For most of them, they're quite big players, and what they are doing right now is they are trying to choose the member states where their strategy would be, it would fit with their strategy. It's not necessarily jurisdiction shopping all the time, because you can understand that one player will try to choose the best member states for a couple of reasons. We've seen that in the context of Brexit, for example. But really, we have to be careful that this is not a race to the bottom, and this is not about regulatory arbitrage. And so we are working a lot at ESMA right now on that. So really, the word supervision is really what we are doing at ESMA. So we are talking about players, we are talking about how we will grant authorizations. So, and we have very concrete conversations at ESMA level. In terms of perspective, and this will make the link with the paper that has been shared, what we realize is actually, because we are facing big players who are digital and they are thinking cross-border, not just one member state, we believe that actually there could be more supervision, more direct supervision from ESMA regarding these players. And actually this idea has been shared in the context of the CMU report that has been drafted at ESMA level. And we fully support this idea. It would make sense in an area, again, where we are facing big players, digital, thinking cross-border, and where actually, from a national standpoint, the regulators do not have that much. It's not that they have like a big experience in that area. It's quite new, so we believe it could be easier for them to share this supervision or to delegate this supervision to ESMA. So this is why we issued this paper, also with the ACPR, so the banking regulator in France, and we hope that at some point this is something that we will consider for a better, it's no longer CMU, but for a saving and investment union. We really hope that.
Thank you so much. And indeed, for those of us or of the audience who are online, the article is titled European Supervision Crypto First, and it's dated last Thursday, the 14th of November, available on the website of the AMF. We'll come back to the supervisory issue later on. I will obviously ask Matthias about the prospects here, but first we want to hear from Mariana. Mariana de la Roche, as I said, is joining us remotely. The floor is yours.
Hi, everyone. Good morning, I believe. Greetings from Bangkok. I'm here until tomorrow, then I'm flying back to Europe. First of all, thank you very much for the invitation. I think that a lot of the points that I wanted to do were already introduced. But I think that if we look at the global perspective, and I would like to finish with some of the things that Mariana just said, and is on regards of the technology basically do not understand about borders. So one of the challenges that we have when we were negotiating MiCA is also how we harmonize the different regimes that were already in place in some of the national jurisdictions across all of them, while also keeping what was mentioned before, this balance between consumer protection while also not blocking innovation with an over-regulated environment for the projects. So there was this really thin line to keep this balance. And I think that is reflected in some of the topics that were only briefly touched upon on MiCAR or were completely left out, which is the case of DeFi and NFTs, for example. What I wanted to mention, because this is also a global debate, is that I really believe that Europe put in place two landmark regulations lately. One is MiCAR, which has been heavily discussed here, but the other one is the AI Act. And we have seen how different jurisdictions outside of Europe are looking at these frameworks. I was very happy to hear that South Korea is also looking into this, but we have the cases of the regulatory framework that just came in Dubai as well, which is quite similar when it comes to stable coins, a little bit more strict. So when it was mentioning that previously was Hong Kong, and then people migrate to Singapore, and now we're seeing how they go to Dubai. Well, I was wondering, like, who comes next after this framework that was just put in place in Dubai a couple of months ago. Then I think that it's also important to keep in consideration how the regulatory framework that we have in Europe plays with the other frameworks, because we have Singapore and Japan that have like a more balancing, like going more for like a balancing innovation with like regulation effectivity to be able to change according to the how fast the technology is growing. And then we have the US with like this informant-less approach. Let's see that if this change with the new government there. But all of these different movements plays in how we are going to also be regulated in Europe. And this comes to specific questions that we will have about the actual implementation of MiCAR at the national levels. And this is how I wanted to connect it, because one of the things that I've been doing the past year is organizing MiCA experts roundtables together with Nina Sittler, where it's not education sessions. We invite experts to talk about what are the key questions when implemented MiCAR at the national level. And here's where we started to see a lot of challenges that need to be solved now by the national authorities. So I'm really happy that we have Franz here so we can discuss it as well. Some of the topics, just to give you examples of what is discussed right now by some of the national authorities, the supervision authorities, and the industry, are in regards to the different definitions that we have for the tokens, right? So it might be the case that in one national state, the concept of utility is different to other national states. So when we have tokens that have been categorized under utility tokens and we get a MiCA license, or we get a white paper, but like then we go to another national state in which this might be a security or might be considered a security, we might have an issue there. And we will need to understand what is going to be the categorization of the token. If it's under the one where it was requested the license, or it was like the issuer, and then it was passported, and therefore does passport apply, even though in the other jurisdiction it will be under MiFID, but here is MiCAR and they cannot reject the passporting. So these are like really practical questions that we are going to start seeing at the national level. The other one that we have seen, and that there is a lot of concerns, in particular from the industry, is in regards to passporting. Because technically, the national jurisdiction cannot deny the passporting of a license. But we have seen that de facto there are like some jurisdictions that are intended to do this process harder. And it has been a process that, like, I don't want to point fingers on which jurisdictions we heard these comments, but I know that people in the room might know who I'm talking about.
You may want to be explicit about that.
I'm just gonna keep it like that. But we have this conversation with some members also of DigiFisma and DigiPro that were sitting in one of the rooms, and they actually invited the industry to report when they see those cases happening at the national jurisdiction, because the role of the commission has changed now that MiCAR is out, right? So they have invited the industry actively to get in contact when they see that this is the behavior of one of the national authorities, which I think that is great, that they now want to hear about what is going on and how the implementation is going. But this has been one of the biggest concerns in the industry, if at least for what I see on the roundtables. Then there is a lot of things regarding reverse solicitation, because some of the rules are even more strict that with MiFID or the prospectus regulations. And I guess the other two that I will briefly mention is the sustainability requirements are one of the ones that everyone is getting nervous about, especially because they are going to be applicable now in December, and some of them are not really prepared to comply. We have like some companies like Sumo also now looking into the methodologies and doing a great job on that, but people is still like running in circles trying to understand how they're going to be compliant. And the last one, and this has been one that I see that is getting a lot of like creativity in the industry, especially for new tokens, is that MiCA added a personal liability for members of the board of the companies that are writing the white papers. And this is massive because none of the previous regulations, not even MiFID, has personal liability. And what I found really interesting is like now some of the companies are looking into MiFID as a safe haven just because they don't want to get close to be personally liable, right? So one of the things that we have seen here is that because we still don't know what is going to happen at the national level and in which direction it might go, some projects are really considering going into MiFID. Maybe in some years, MiCA will be like the safe haven once we know and there's more clarity about how it's going to work at the national level. But for now, there's actual discussion ongoing into MiFID, which I found like really hilarious because before that was exactly where the industry didn't want to go. And it's the irony of bringing MiCA to create clarity and certainty, but there's so much uncertainty at the moment because of all the settling of the level 2 regulation, that people is actually like going in other directions. So this has been really interesting to see. I think from the practical level, and I finish with this, I'm really curious to see what's going to happen in January because some projects have, and I think that was mentioned previously 2 or 3 times, they tend to go into certain jurisdictions to do the licenses there. And what we are also seeing is that like some jurisdictions are receiving so many applications that they're not going to be able to process them all at the same time. So this is also going to impact some of the projects that decided to go there, and they might be moved or like remove the application from a jurisdiction to another one that didn't receive so many applications just because might move faster on the process because of the capabilities of the agencies at the national level itself. I think that I covered like many different topics there, so I'm just gonna stop there. I just think that it's going to be really interesting what is coming for the industry.
Great. Just for clarification, at the end you mentioned jurisdictions. Did I understand correctly that you meant member states and national authorities, right?
Yes. Okay. Yes.
We also have in the room Soo Byung-ho. Sorry for mispronouncing your name. Byung-ho, you came from Seoul as well to join us today. Do you want to make any comments on the discussion? We would very much be interested in having your perspective. And Mr. Soo is director of the Financial Innovation Division at the Korean Institute of Finance.
Hi, nice to meet you, and thank you very much for having us here. I'm actually basically came here to discuss potential cooperation with Bruegel in the future, and I'm sitting here basically for moral support. But actually,
sorry for putting you on the spot.
I like to, we're talking about crypto market and crypto regulation itself. I'd like to point out that in Korea, crypto market is kind of competing with stock market and bond market. And as more and more people are investing in crypto market, the stock is affecting the stock market considerably. So after Trump, for example, people are moving to the crypto market. So the stock price is going down. And it's putting a lot of pressure on firms because a lot of companies have a PBR lower than 1, which attracts hostile takeover. And so I'd like to ask if those kind of phenomena is also happening in any of the EU member countries, and if so, what are your perspectives, or what do you think we should do to cope with it? Yeah.
Matt and Marianne, do you want to answer that question?
On the first one, the question whether there is whether we observe a kind of foreign interest in some of the crypto firms. Yes and no. We certainly see, I think that's alluding to also the previous intervention, we see a lot of interest in getting applications, and there are various vehicles for getting applications in. One is to get the process in motion, but what we've seen in the past is rather perhaps an interest in acquiring investment firms with an existing license, and that's because they have licenses and there's a certain value in acquiring that. Of course, in the new framework what we're having now, we have rules in MiCA on when you take a stake to have control on those who buy. And these also now in the process of being complemented by more detailed provisions coming from level 2, so qualifying holdings and the like, very much modeled on the kind of qualifying holding provisions we see in banking and securities markets. So that's kind of one way of trying to at least keep track, remaining open, but keeping track on the good repute, etc., of the people that do acquire.
Right. Marianne, on the phenomenon that Mr. Su was referring to of, porosity between the different markets, what do you observe in France?
Well, just perhaps a word on this phenomenon of acquiring investment firms. This is something that we are fully aware of, because in MiCA, if you look at it, when you are in investment firms and you want to apply for a MiCA license, you don't go through the same process as for a digital asset provider or someone who wants to start from scratch in the crypto area. So it's basically not an authorization, but a notification process. We are aware of that, and it's easier, I would say, because basically it relies on the fact that what has been done, you don't have to do it again. So
right.
We are aware of that, and this is something that we have worked on at ESMA level, trying to, in the technical standard, to make sure that it's not a way to escape scrutiny from the regulators. So, as I see the RTS that has been or is about to be adopted, I don't remember, it's clear that it's not something that is simple. So if you acquire an investment firms, you still have to go through a strong process regarding crypto asset activities, because this activity is new. We have to look at it closely.
Right. And of course, when you refer to an RTS, that's a regulatory technical standard. I'm always playing the acronym police here.
Sorry, technical standard.
Matthias, the issue of supervision came in both from Marianne referring to the recent piece calling for, pooling authority at ESMA, but also very much from Mariana describing, the uncertainty created by the way the passporting works in practice differently from theory. We got this message, I guess, from the European Parliament election in June, right, that there is a desire, or at least it has been interpreted that way by many observers, that a lot of stakeholders want more simpler situations in Europe, reduction of the compliance burden. Isn't that an obvious case? Would things be simpler if ESMA was empowered to supervise crypto assets? And can you also give us more of a sense, again referring to the joint piece by Marianne Barbalayani and François Villeroy de Galhau, of what the regulation, what MiCA prescribes in terms of supervision, and what flexibility is there in the current state of MiCA for integrated supervision?
Well, on the last question, I think it was discussed during the negotiations of MiCA. There were the calls from some corners for European-level supervision of CASPs in particular is not new.
Crypto asset service provider.
Exactly, another one. I'll try to remember that to actually spell out the abbreviations. Thank you, Nicolas. So for crypto asset service providers, there was a debate, a fairly short one, in the sense that for CASPs at the time, there was simply not a sufficient kind of push or majority, either between member states or the European Parliament, to actually kind of locate supervisory responsibilities at European level, contrary to stablecoins, where the EBA centralizes supervision for the significant issuers of stablecoins. For CASPs, it was decided to kind of rely on the national supervision. I think also in our proposal, that was what we put on the table. And the reason was also we were quite conscious of the fact that we're building a framework for the first time, and that it seemed natural at that stage, also given the quite big variety of service providers out there, to start national and then take stock. Of course, we are aware that some of these firms are relatively big. Okay, we're not speaking bank size here, but still relatively big, and we're certainly aware also that they do have a cross-border element to them. Of course, what we have in MiCA, we have colleges, and there are also, where the legislative debate ended up is that there are some kind of fairly soft provisions related to significant crypto asset service providers. But to be clear, they do not alter the division of labor between national and European level.
Exactly. So basically what that means is that to implement the recommendations of Barbara Layani and Villeroy de Galhau, there would need to be a change of legislation by the co-legislators. Marianne, I want to come back to you on the questions that was raised by Mr. Su. Do you see in Europe direct read across or influence between the traditional securities markets and the crypto asset markets, or is that kind of, Korea being perhaps more advanced down that learning curve than European markets are?
Just two things before regarding the supervisory authorities. I think that MiCA has a dual regime there, and that's one of the things that has also created a lot of questions, because it was just mentioned those cases or issues that are considered relevant, they have a different regime, but we do not know exactly who is going to be under that regime. There is one criteria that is having more than 15 million active users, if I'm not wrong on that one, at the level of the CASP, but we don't know where that number came from, right? And I don't think that there is any of the CASP that are there yet with that number, but if the industry keeps growing, it's going to go there, right? And the idea is that we have more users because that will mean that we are actually scaling the technology and there's going to be more adoption. And then I think that there's going to be also some issues because of the lack of harmonization between the different supervisory authorities at the different national states. And this might create also jurisdictional arbitrage, so regulatory arbitrage. So I think that there's a lot of open questions there is still to be solved. When it comes to the similitudes between MiFID and MiCAR, which I think was your question, I think that there are a lot of things that we see that are actually, in fact, coming from the traditional financial system. I think that in some areas, MiCAR went beyond, which I think that from the industry perspective is a little bit problematic. There's some belief still in the eyes or minds of some that crypto, for example, is more prone to money laundering than cash. And this has been reflected in the AML package that we have seen, where the thresholds are higher for crypto than for cash, which makes no sense if you actually understand how the technology works and how easy it is for us to track funds, or where the provenance.
Did you say the thresholds are higher or lower?
Are lower. Sorry, are lower for crypto in comparison to cash.
Yeah.
Yes, sorry. I think that in this, in the example that I put about the personal liability, this is also something that goes beyond. The criteria for the reverse solicitation are also higher in MiCAR than in MiFID. So we have seen that there were a lot of things that were taken from there, and I understand that it's consumer protection, but I think that in some areas, and please don't understand wrong, I think that MiCA is a great piece of regulation, and actually, as I mentioned at the beginning, it's a landmark. But I'm really looking forward for the reviews that are going to come, because I think that in some areas we went beyond of what we should have been, especially with some of the powers that we give to ESMA and the EBAs by determining some of the criteria that are going to be implemented, and that it came with the RTS. And I think that is really is going to be difficult to comply with some of those from the industry perspective, and some others I do not really see how they're going to be enforced. And that part I'm really concerned, because having a regulation that you cannot enforce is like having a really nice piece of paper, but you can not really do anything with it, and it's putting a really bad example. So on those questions, I think that we are going to start to see more what is going to happen at the national level. And I said, as I said before, there are some areas that are going to be really complicated, because even though we are in Europe and we have this regional approach, there are like pieces that are really to the national jurisdictions and the national authorities, and there is no harmonization. For example, this definition of what is utility, what is security, this is really different from member state to member state, and this is going to
Right.
start to cause some frictions.
And you mentioned things that went beyond what is in MiCA, but I didn't understand whether that was a draft technical standard or the national provisions. Can you repeat that or clarify?
It was in MiCAR. For example, I think that it's Article 13 or 15. I'm really bad with those numbers. But the one of like personal liability, this is something that we have not seen in the other regulations. And
Oh, I see.
and then there is some concrete examples when it comes to reverse solicitation and the definition of offerors and what is a public offer that go a little bit beyond of what is in the prospective regulation. So those particular two examples are already going beyond.
So, so it's MiCA going beyond what you have in other traditional services, right?
It's more strict, I would say it.
Exactly.
But maybe the others feel different.
So I'd like to open it to the floor. We have people online, and I encourage them to use Slido using the hashtag regulation. And we have people in the room. If any questions are in the room or online, I will take them. Otherwise, I have more questions. Let me see if we have any coming up. Not now. So maybe coming back to you, Jongdo. We had the U.S. election. Yeah, we had a remark on the web about another possibility of arbitrage, which is an audience participant saying that if the supervision of CASPs, crypto asset service providers, is delegated to ESMA, then crypto asset platforms could apply for an investment firm license and notify crypto asset services and stay under national supervision. So this, to me, illustrates the web of interdependencies between the different mandates in capital market supervision, and it makes it very difficult to say, you know, this is for ESMA, this is for the NCAs, national competent authorities, interacting with the threshold about relevance or significance that Mariana referred to. But Jongdo, we had the US election. That's a new context. I know it's early days. We don't even know who will be the Treasury Secretary and whether that will be a crypto bro. No chance for it to be a crypto cis. But whether the Treasury Secretary will be a crypto industry person or not. So this is the new world we're in. How do you view the consequences for the rest of the world, including the EU and Korea? Will there be, assuming that we get into very rough waters in the US in terms of regulations, is there a way to ring fence that risk? Or does that mean that basically the US position will dominate whatever our jurisdictions do in this field of crypto? How do you view that?
Actually, I commented the race to the bottom, and currently in US, the US SEC applies strict securities regulation on the crypto market. But if the Trump administration changes its policy, many countries follow the US standard to attract more crypto asset businesses. But some countries refuse such a trend to protect their domestic individuals. So it's very difficult to expect make any expectation the future. But I think there must be a diverse approach to US's policy changes.
So let me ask the same blunt question to you, Matthias. Is there any way, assuming there is, you know, Mr. Gensler is replaced by another crypto bro, which is not an unreasonable assumption at this point. So let's move directly to that world. Fast forward to February. Does that basically mean MiCA becomes irrelevant given the cross-border nature of our market and the openness of EU capital flows? Or is there a way to mitigate the effects of that in terms of all the protections that the EU is trying to introduce?
I think the short answer is no, it does not render MiCA irrelevant. MiCA
I'm
is
reassured.
No, but MiCA's premise is a framework that is now in place. It's starting to apply. The rules are there. If you want to be in Europe, you have to play by European rules. If you want to target EU investors, you have to play by European rules. Of course, another big fact, I think you alluded to that entirely rightly so, is that the US is an important actor in the global financial system. Going forward, of course, it will be having a direct impact on those who have not yet established crypto asset regulations. And that, of course, in future reviews, we will look at that. For now, we have a framework, and that is the framework that applies.
Marianne, you've been in this business for several years. I'd like you to maybe offer you the last word because we're close to the end of our session, but to give us a sense of how you've seen the debate evolving since you started entering that space. We know it's a fast-moving area. At the same time, Bitcoin has been around for, 15 years now. So how do you see the direction of change since you started in this area, and what do you think it tells us in terms of lessons learned?
I think it's going in the right direction. I think what we are seeing right now is that cryptos are going to be a more mature markets with we hear some small players saying they will not pass the bar of MiCA, for example. But I think it's the price. It's a bit of the price to pay when you want to sell products to retail investors where they can lose their money. It's not something you can just do without any rules. So if you want to be in that market, now you have to go for this type of rules. So I think it's going in the right directions. But again, I think I see many challenges. I think most of the challenges have been discussed by other panelists. I heard Mariana talking about the classification of crypto assets. This is one of the biggest challenge, because indeed, if we do not agree on what is a crypto assets and what is financial instruments, then it's not working. So we need to work on that. We are working on that. There are some guidelines from ESMA that are expected. And so we have to keep working on having the same understanding. So once the rules are written, we need to think about how we apply the rules. So we really, in Europe, this is a challenge. Speaking from an international perspective, this is clear that now that we have something in Europe, and it will apply in a couple of weeks, we need to think even beyond Europe. And this is where also the IMF is part of the IOSCO works.
International Organization of Securities Commission?
Yes, thank you, because it's quite long. So I was hoping you would do that for me. And so we are member of the IOSCO, and here again we have something to do. It's clear that players are not. It's not just about choosing one member state over another in Europe. It's about choosing a state in the world to have this type of businesses. So we need to think about how we also have the same level playing field in all countries, all jurisdictions. This is quite challenging, but there are some works being done also at IOSCO level to achieve that goal.
And I don't want to finish without correcting my own oversight and mentioning that INATBA, where Marianne is affiliated, is the International Association for Trusted Blockchain Applications. Actually, we have just 1 minute left, so the last word will belong to our Korean friends who came all the way, Jongdu and Byung-ho. Any lessons from this hour?
I studied MiCA, and I expect at first when the European Commission prepared MiCA, I expected this registration may kill the crypto asset market in Europe because it's very strict, apply very strict policies. But now I'm studying MiCA to adapt similar systems in South Korea. So I will follow up the MiCA's actual operation in the market and its legislative impact. And your comment must be informative and very insightful to Korean future policy makings. Thank you so much.
So for those who believe in the so-called Brussels effect, that would be a case study. Thank you so much, Mariana, for joining us from Bangkok. Thank you to all our participants. And for the very thought-provoking discussion we had. Of course, this is not the end of the debate. We'll come back to this issue at Bruegel. We will also observe the implementation of MiCA from January 1st. And many thanks to all of you who joined us today.